Joining us now to talk more about the Fed and the economy, Mark Zandi, chief economist for Moody's Analytics. Mark, good evening. What did we learn today?
Well, we learned that the Fed is going to start tapering QE at the end of the year, end QE by this time next year, and start raising interest rates by the early part of 2015. Of course, that all depends on the economy and that the economy sticks to the script that the Fed believes that it will. And that's the most likely economic scenario and the most likely interest rate path.
So, Mark, what do you think of this timetable? Do you think that the economy is ready to have the training wheels come off?
Yeah, I do. I think that by late this year, the fiscal headwinds, the tax increases and spending cuts will begin to fade. That'll let the better private economy start to shine through. That'll be more job growth and lower unemployment. That is a long, arduous narrative and story, but I think it is the best and most likely story. And yes, at that point, I think it makes sense to start tapering QE, ending it, and starting to raise interest rates.
If the economy is getting better, which allows the tapering of the QE, why did the markets react so negatively?
Yeah, good question. If you read sort of the fine print in the FOMC statement, it was pretty hawkish. They dialed back their worries about the risks to the economy. They lowered their forecast for the unemployment rate. They even dismissed the lower inflation as just being temporary. So I think the markets took a look at that and said, maybe the risks are higher that they're going to end QE faster than we had anticipated just yesterday or the day before. The other thing I would point out is, these markets, the bond market, the stock market, all the markets have come a long way over a very short period of time. So they're very vulnerable to any little thing that goes off script. And so that may be also contributing to the ups and downs in the market that we're seeing in the last few weeks.
So investors also want to get a handle on where interest rates are going, both for the 30-year mortgage in the housing market and also on the 10-year. How much higher is it going to go? What are your forecasts for the rest of this year? And what impact is that going to have on the still fragile housing market?
Well, the interest rates are going higher. They're going to go up and down and all around. That's what interest rates do. But my sense is that by the end of the year, certainly by this time next year, interest rates will be higher, and they're going to move steadily higher over the course of the next several of years. That will be hard for the economy to digest. But if they're rising because the economy is improving, because we're creating more jobs and unemployment is moving lower, then I think the recovery will remain intact and be okay, and housing will be okay because the better job market will trump the higher interest rates, and we'll be just fine.
Very interesting. Mark Zandi, always great to see you. Thank you for coming by tonight.